I make $5,000 or more in the next 20 minutes of this video. Selling puts is by far one of the best, safest, and most consistent strategies to make weekly income from option trading. I'm going to be using my portfolio to collect income and sell puts live in today's video. This step-by-step guide will help you better than any other video on the internet because I'll be showing you real live proof of how this works, and we're going to be keeping track of how much money I can make. If you know the right time to sell puts, you can collect a ton of money from premiums very passively with very little risk. This video is going to consist of 3 phases, and you can't skip any of these if you want to fully understand how to make money with this strategy. In phase 1, I'm going to explain to you very simply how selling put options works. Then in phase 2, we're going to get into the stocks and indicators that I look for when I'm about to sell some put options. And lastly, in phase 3, to show you real live proof, I'll be doing some live trading so you can get examples and see how I do it in my own portfolio. Firstly, there are 2 reasons why you're going to want to sell put option contracts. 1 is to generate income, and 2 is to buy shares of a stock cheaper than the price of the stock in the market. Imagine that a stock is trading for $100 per share. And then imagine if you were able to buy that same stock cheaper than the current price of the market and actually get paid to buy it cheaper than the market. That's exactly what selling put options can do for you. A put option is simply just a contract between 2 sides, the buyer and the seller. For this strategy, obviously, we're going to be sellers. So the buyer of the put option will have the option to sell us 100 shares per contract of the underlying stock at the strike price that we choose. And of course, you can pick any strike that you want to potentially buy the stock if you do get assigned. So keep in mind that you want to be comfortable with buying 100 shares per option contract of a stock that you get to choose. You're in full control, but you must make sure that you will like the stock and it's a high quality company with good financials because you will be obligated to buy 100 shares. Selling puts can be expensive because this is one of the strategies where you need 100 shares of capital ready to go. So if you have a small portfolio, you will have to stick to cheaper stocks like HIMS, SoFi, Snapchat, NEO, American Airlines, and maybe some other stocks that are trading for, around $10 per share or $5 per share. Stocks that meet your portfolio size are great as well. This way you have proper position sizing. You don't hinder any of your risk management. You have to keep in mind how much it's going to cost you to buy 100 shares of the stock. So if that's 50% of your portfolio, obviously that's not ideal. That would be poor position sizing. But the best part of this strategy is you're getting paid to buy a stock that you want to buy anyways. At worst, you will buy the shares at the price of your choice, called the strike price, and either way, it should be a really good outcome for you. Here's an analogy to help you out. Selling puts is basically like an insurance company. For example, a car insurance company charges people depending on how risky it is that they're going to get into an accident. That's why insurance is more expensive for new drivers with little experience. And it's exactly the same if you're selling options and you're selling puts to be specific. You'll get paid a premium up front for the risk of the stock falling down below the strike price, which may not be an ideal situation because you still have to buy it at the agreed upon strike price. But little does the option buyer know, you don't care. You're happy to buy a high quality company lower. The option buyer, he's purchasing it because they want to hedge or protect, and they have other reasons why they're purchasing a put option, which is mainly for protection, and it costs money to protect yourself, like buying insurance. But as you'll see in this video, the risk can be exploited and heavily mitigated if you know what you're doing and how to manage the position. Yes, some of the trades can lose money, they can go into the money and below the strike price, and when I collect the premium, I still need the option to expire, right? I'm still waiting up until expiration, but the cash is collected up front, and for every single trade that you'll see me do, I'm going to do 5 or 6 trades. I'm happy to buy all 5 or 6 companies that I'm going to trade, and I've already done research ahead of time. All that matters is that I have a high win ratio, meaning that I win more of my trades than I lose. And when I do get assigned, I'm okay holding because these are high quality companies. I'm still going to be a winner either way. I'm winning because I'm collecting premium, and I'm winning because I get to purchase a stock if it goes down. If it does not go down, well, that's perfectly okay as well. I still get to keep the premium anyway. So either way, this is like a non-losing strategy, and this is what I believe to be the best strategy. And I'm really excited to show it to you live and go through examples as well as technical analysis of me placing every single trade. Now, I want to go over some real numbers and examples for you before I go into live trading. I want to help you understand and really visualize this so you can master the strategy. And again, as I promised, I want this to be like the last video you actually have to watch about selling puts to really master this in a really short amount of time. We'll use Microsoft as an example. Let's say that you think Microsoft is at a low and you don't think it's going to go much lower in the next 30 days. So what you want to do is sell a put option contract on it. You can pick the strike price of $400 per share, which means if Microsoft does happen to fall below $400 per share, you're going to be comfortable buying 100 shares at that price. But you don't mind owning at that price because you think that Microsoft is a fantastic company, which it is long term. And for $400 per share, you'd be happy to own it. It's currently trading for $412 per share or so. So you're basically going to be getting paid $5 in premium to buy it $400, where the stock would have to go down $12 for you just to get assigned. If it doesn't go down $12, the $5 is yours to keep. If it does go down $12, you'll have to purchase Microsoft for $400, while today it's trading at around $412 per share. Seems pretty crazy, right? Like, why would someone do this? Well, someone else out there in the world thinks that the stock market might fall, or Microsoft stock might fall, or maybe they have a lot of Microsoft shares and they want to buy some put options as insurance in their portfolio in case that stock might decline for them. They might be right, they might be wrong. Either way, we're happy making this trade because we're following some important indicators and we want to own a blue chip Mag 7 stock for $400 instead of $412, and we're happy with the premium of $5 per share for 30 days out. Now, this is all theoretical, so let's actually open up my portfolio and go into my trading platform and start placing some trades, having some fun, and learning a lot on how to make consistent income selling put options. All right, we opened up my portfolio. We're about to buy bicep over tricep. We'll sell some of these put options. So my portfolio is doing pretty good at 4.3 million, and I want to start off with Alphabet or Google stock. This is a fantastic company that I want to invest more into because they generated 8.4 cents of earnings per share during 2024. So they had their earnings recently. And if you look at the PE ratio, it was around 24. If you look at the stock price divided by the earnings, has a PE ratio of like 24, which is significantly cheaper than Nvidia, Microsoft, and Apple, which all trade around like the high 30s. So for me, Alphabet is an absolute steal. And if I look at the technical analysis, this stock is stupid cheap. Like, it fell all the way from 207 down to like 188, and it's at the bottom of its Bollinger Band. So for me, like, literally, I'm happy to sell puts anywhere under the Bollinger Band, and the Bollinger Band is like 186. So let me take a look at a few options and go to trade, Google options. And this is the first option that I'm going to be selling. So again, because I'm at the bottom of its Bollinger Band, I'm going to be happy to sell anything under 185. I'm going to pick an expiration date that's going to go out for probably March 21st because I like monthly expirations. I think monthly expirations are very easy to manage. You sell a put option, you don't really have to monitor it too much. And then essentially most of the time I will be holding up until expiration. Sometimes I'll manage the position early, and we'll talk about that a little bit later on in this video. Again, I promise to teach you everything. So, let's just go ahead and sell this put option. It's unlikely that you'll have to manage this because Google has already fallen a lot. So it's unlikely to fall like even more. You can see right here that if I were to sell a put option for the March 21st expiration, the 180 put option right here, first of all, I'm looking at bid and ask. Right? The bid is basically where if you were to sell the stock, you would have to sell it around the bid. And if you were to be buying the stock, you would have to buy it around the ask. Okay, there's a bid and ask spread because there's market makers on Wall Street that are providing liquidity. The liquidity here is, volume. The volume is 22. The market just opened up. It's like, a little bit after 9:30 a.m. as I'm recording this on a Monday. And the volume is still like pretty low for the day. However, the open interest is very healthy. Like 6,800 is really good. So there's a lot of open interest and demand for these options. So that's a really good thing. The bid-ask spread is like really tight and good. And the delta is actually really low. So my first trade here is going to be like a really conservative trade. Some of the trades that I'll have later on are going to be like SoFi, American Airlines, Archer, and etc. I have some more like names to trade, but this first name is just going to be really safe, passive income. So I'm going to go for the 180 put right here. Now I could also go for 185. This would be like a higher delta trade. So this is 0.39 delta. And in truth be told, like I could also do this because this has higher premium. It has 465 versus like $3, but there's a higher chance of getting assigned here. So both of these options would be fantastic. I already have a lot of Google shares, a ton of Google shares, so I'm just adding to my position. So by selling this put option right here, I already have a sizable position, so I don't want to sell like too many more puts that are going to be too aggressive. Although if I had no position, I would go for 185. So I want you to understand, if you don't have a position, you can go for one or something closer to the money, whereas I'm going to go for 180. So I'm going to click continue, and I'm going to go for 5 contracts here, and I'm going to go for something closer to the bid. So I'm going to go for 2.9. I'm just going to try to get a high likelihood of fill because I respect your time and I want to make this video as short as possible. So there we go. I did get assigned. Boom. There we have it. That's the first trade. Let's put on the bottom of the screen $1,459.80. I've sold 5 contracts. That is the first trade that I have made. And so far we're like a little bit over 10 minutes in the video. So I'm gonna try to hurry up and keep going here on more trades. Next trade that I wanna do is American Airlines. American Airlines is a stock that I've been trading for a very long time. In my Discord community, since I started Discord, I have every single session that I have done recorded since 2021. And like 4 years ago, you can actually like look, I was trading American Airlines. I've been trading American Airlines for a very long time. And that's because if you look at American Airlines, this stock over the past like 5 years, it's really not done too much. The stock has just honestly like gone sideways. Yahoo Finance is like currently kind of glitchy, but the stock hasn't really had that much activity. It goes up, it goes down, which actually makes it like an option seller's dream. It's really profitable to sell options on American Airlines and run something called the wheel strategy, which, you know, at the end of the video, I'll show you more about the wheel strategy, but the wheel starts off by selling puts, and selling puts is like the best for American Airlines. So if I go to the 3-month chart right here, you will see that American Airlines is actually up a lot, but it's not at its like highs of like almost $19 per share. The stock has actually come down a little bit to reality, which makes it a really good opportunity to sell some put options. So I'll go to sell put. I can go for like a shorter term expiration just to give you guys some variety so you understand that you can go shorter term. And I'm pretty bullish on American Airlines, so I'm gonna go for a higher delta. The delta here is 0.38. Again, good open interest. The volume just started because it's like early in the day, and the bid-ask spread is amazing. So I'll go click continue and I'll place this trade. I'm actually gonna do like 50 contracts here. So this would be like $465, pretty good. And this is like, you know, safe like risk management. It's not a big position. So I'm gonna go for 0.31. Again, closer to the bid because I wanna get filled right away and not waste any time in this video. There we go, so that's my second trade. We can add $479.40 to the bottom of the screen. So far I have made that much money by selling put options. Of course, again, I do have to wait until expiration, so cash is in my account, but still gonna be some time for this option to expire, which is actually not that much time, like 11 days, which is nothing. Next stock I wanna cover is going to be SoFi. Now, SoFi is one of my favorite stocks. It has recently fallen below 15. Now we're trading for slightly above $15 per share. The volatility is really a good opportunity to jump in, and it's pulled back a lot. Like if I go to like 1 month, this stock has pulled back from $18 per share. You can actually see if I go to the chart that the RSI was like really low when I was looking at the overall RSI. Like it used to be a lot higher, and that is actually trading for closer to like 80, the 80 level, like in mid-December. And now in mid-February, the stock is essentially, I think, coming back up. Like we saw that under $15 per share, it was just a little bit too cheap, and investors have started to buy it up. Now, something that I'm also like excited to buy SoFi is because sales growth has accelerated in the third quarter to 30% year over year. In the non-lending segment, it's contributing to a lot of its growth. So that's really exciting, and I'm a long-term bull. And I think that just based on the statistics, based on the facts, the net income was $61 million in the third quarter, up from like a loss of like 65 or 67 million from last year. So this stock has become like massively profitable, and like that makes it a really good opportunity to sell puts because the business is an uptrend and the stock has like pulled down like significantly. So you can see that I already have like a couple sell puts here, but I'm gonna open up another sell put. For the purposes of this video, like I don't mind opening up more shares to show you guys and teach you on like how I would make money. Like I don't mind at all to sell even more puts. Like it's a high quality company. So if I go for the March expiration, which again is gonna be like 30 days out, I'm gonna go to sell put, and you can see that the options are like super juicy. Like 6% return on this option right here, essentially, which is really high. So I can go for like the 15 strike. which has a 43 delta, and the 14 strike has a 29 delta. So I'm gonna go for the more conservative option. The bid ask is really tight and the volume is actually like the best so far from all the stocks that we've looked at. So I'm gonna go for the 14 strike, click continue. And again, I'm trying to make $5,000 or more in this trading session. So I will, like, obviously I'm not gonna open too big of a position. Position management is really important. I want you guys to understand that you can't put too much into one position. You still need diversification across put options that you sell, because diversification helps reduce volatility, right? If you have all your eggs in one basket, that's dangerous, right? So you have to understand that you should probably put like 5-10% of your money in a sell put position on a high quality company and have at least 10 positions in your portfolio. So if I go for 0.54 here, this would be $809. And it's a fairly small position, you know, it would be 20K. By the way, keep in mind that the money that you see here, the negative $20,000 is not actually how much like I can lose. I know it looks like extremely scary and you're thinking to yourself like, oh my gosh, I'm gonna make $800, but I can lose 20,000. Well, the max loss here isn't really correct. In theory, it's correct, but it's like calculating the stock going down to zero. It's just not gonna happen. Like a high quality stock can't even fall like 50%. If you sell puts on like, you know, Apple, it's probably not even gonna fall 10%. Looking at the max loss is really scary. And it would be the equivalent of like getting in your car and the max loss on you driving is you losing your life. You might not live today, okay? That is actually the truth. But most people still get in their car, they drive to work, and we still have to go about our day, still go to work and go to the grocery store, etc. So you see how like getting in the car is also a max loss of like your whole entire life, right? 100%. Well, that's the same thing here. Like the max loss is negative 20K, but it's like not gonna happen, right? In fact, it's riskier to get into a car than like this stock going down to zero, because the stock would have to like commit fraud. And even if it committed fraud, it's literally almost impossible for it to go down to zero. So although this is really scary, I want you to understand that the statistics are actually a little bit different. And this option trade of selling puts is actually a lot more favorable. Yes, you're tying up the $20,000, but you're not really like at risk of losing the entire amount, because the worst that happens is you get put the shares and you just hold a high quality company. So this number can be really, really deceiving, and I just wanted to explain that to you. Now let's click review order and submit. Hopefully I talked a little bit and this still fills. Perfect, it did fill. So I got, awesome, all 15 contracts. So boom, there we go. That was our third trade. Let's add $839.40 to the total amount of money that I've made so far. All right, perfect. Let's go into the next trade. Next trade I want to do is ACHR. So this is Archer Aviation. This is a really interesting company. It has massive long-term potential in electric vehicle takeoff, essentially, and they have secured partnerships with United Airlines and Stellantis. So what I think makes this stock good is it is smaller cap. It's a 4 billion market cap, and I do want to own it. And I do have 2 put options that I've already sold, and I'm already like up $769. But I do want a bigger position. It is up today, and I would like to own it. Like you can see here how it has a really strong support at anything under $9. So I'm gonna go to trade ACHR options, and I wanna point out that I'm gonna go smaller on this position because it's not the safest company, right? The bigger the market cap, the safer it is to trade a stock. And the smaller the market cap, there are some risks, right? It's a smaller company, but it's not super small. 4 billion in good industry and good, potential. I like that. I'm just going to keep the position to like a fairly small trade. The premium that I'm going to collect here is going to be massive. Like, essentially this is around a 6% return in 1 month, because like 8 times 6 is 48. And the premium here is like 52. So it's over a 6% return. And that's like a fantastic return. The implied volatility is wild. The reason why the premium is so high is because the implied volatility is astronomically high as well. That's because there's higher risk for a small cap stock that has lots of volatility. The delta here is lower, which is 0.23, but I'm gonna need a lower volatility because the risk is higher. All right, so each trade that you do, like if I do 1 contract here, it's gonna be a very small amount. So like this is super small account friendly. This is like very small account friendly trade where you're gonna make 50 bucks and you're putting $746. Again, not all of that's at risk. Technically it is, but again, it's not gonna go to zero. But you are tying up that amount of capital. So the return that you're gonna get here is gonna be like a 7-ish% return. I'll put on the screen right now, but I think 53 divided by 747 is roughly around like a 7% return, maybe 6.8% return, which is a really good return. What I'm going to do is I'm gonna keep this position small. I'll do like 15 contracts, 15, and there we go. That's like a 11 grand trade. I like that. I'm gonna go for 0.53 just to get high likelihood fill. Oops, you see the bid ask just changed a lot. So these options are a little bit less liquid. They have a little bit worse bid ask spread, but let's go for 0.51 and see if I can get filled real fast. So I submit it and there we go. I did get filled, 15 contracts. Perfect. That is the fourth trade that I've made. Let's add $764.40 to the total amount of premium that I've collected so far. Nice. The next trade that I want to go over is going to be Starbucks. Starbucks has had really good performance lately, and I do want to ride the momentum, although I don't really want to buy it at these highs because I've made money from Starbucks going from 87 to 100. Like that was a trade that I had in my Discord community, but then I got out of it for 100, which I'm not perfect. I make mistakes, and like I got rid of it for 100. Now it's at 111. So I missed out and I want to jump back into Starbucks. Starbucks generated like over $3.50. It was like 3.55 in earnings per share in 2024, placing its stock PE ratio at around 22, which is a really good PE ratio. That makes it significantly cheaper than other consumer discretionary giants like McDonald's and Chipotle, although I like Chipotle a lot as well, but those trade at a higher PE ratio of over 30. So Starbucks has been a really good value compared to the competitors in its space. And looking at their China growth rates and how they're expanding into China, it's actually really strong. And they've had China grow 10% year over year in same-store sales. Same-store sales is super important. It just means how much are people shopping at the same store? Are they coming to that same store more or less? 10% growth is freaking amazing, because when I was working on Wall Street, I was looking at margin expansion, same-store sales, like these were big numbers and really important data points that I was looking at. And for Starbucks, it looks really good. So I'm going to go to Starbucks, type in here SBUX, and I'm also going to sell a put option. Now, I got rid of this stock for like $100 per share or so. So let me actually look at my history. When did I get rid of it? I actually got assigned for 95. I did make money. I traded it a lot over the past and I have made money on it. So what I want to do right now is I want to get as close as possible to 95, but I'm not going to be able to get that. And that's fine. You can't always have it your way. Like psychologically, I would love to get Starbucks for 95 because that's where I sold it. But my average cost for where I got out of the stock doesn't really like matter, right? And today I need to make a decision. What can I get today, right? And it looks like it's gonna be 105. Like 95 has no premium, it has 20 cents. So if I were to go to the 105 right here, the delta is actually really low. So this is like a super safe trade and it's Starbucks. So this has a really large market cap, low implied volatility. So this is a trade where I would personally go a lot heavier. I'm going to go for like, let's see if I go for 20 contracts. Yeah, it's gonna be kind of a lot. Let's go for 15 contracts and just keep it standard. And I'm gonna go for 1.03. I wouldn't call it greedy, but I'm gonna go 1 cent above the bid. And I'm gonna try to collect $1,500. Perfect, that went through immediately. So awesome. That was the fifth trade that I had. I have one more trade. This fifth trade collected me $1,559.40. So I'm going to add that to my total income collected. I believe I'm around $5,000 now. But just to be safe, let's do one more trade. Let's do a trade on Tesla. So Tesla is obviously like a stock that I've been in for a very long time. I actually have a video where I put over $1 million into Tesla and it went up a lot, it went down. I'm still up like over 6 figures on Tesla, but at one point I was up like over $750,000. So I've given back a lot of my gains. I mean, it is what it is. I'm a long-term investor, right? Like I'm not gonna get attached to like short-term results. I'm looking out far into the future. How can I grow net worth? How can I grow income per month? And that's what I focus on with my clients as well. You know, we're trying to get consistency. So it's not about like going up fast and then losing it. That happened to me, and that's just the market. That's just the nature of the market. But every single period that I check, every single month, I want to be growing, right? So Tesla, I want to say that in Musk, we Trump, or in Trump, we Musk. I say that joke on YouTube, but it's true that Musk and Trump are friends, and I think that's going to mean a lot of good stuff for Tesla in 2025. Q4 earnings call for Tesla, Musk said that we're going to have an epic 2026 and ridiculously good 2027, 2028. That's based on artificial intelligence, full autonomous vehicles, and the Optimus humanoid robot products. And I think that it's wise to get into Tesla early, although it's a very volatile stock. So I'm going to be using proper risk management here. I do have a lot of shares already, but again, I want to point out it's important to not put in too much money in any one stock. Tesla on the technical chart is below the Bollinger Band. It is incredibly cheap based on statistics right now. The RSI is 36, very low. So I'm going to go to Tesla and I'm going to open up a small position because I already have Tesla. Again, I want to be reasonable to help you guys, small portfolios, medium portfolios, and larger portfolios. We're not going to put $1 million into Tesla. We're just going to go, small, maybe I'll do 1 or 2 contracts. So if I go to sell put, and I go for something like, again, I think monthly option selling is the way to go. So if I go to sell put and I go for, honestly, like Tesla, it's at the bottom of its Bollinger Band. It really can't go that much lower based off statistics. I would be more than happy to buy Tesla at 340. So I'm gonna click continue here and I'm just gonna go for like 1 contract for like example purposes and actually place this trade. And I'll review this order and I'll just place 1 contract. So nothing super crazy, but yeah, pretty good trade. I'm gonna add that to the bottom of my screen. Hopefully now I'm above $5,000 at this point.
Now, there you have it. You just saw me make this amount of money by selling put options and collecting option premiums. These options haven't expired yet. Some of them will soon, and some of them will in a long time from now. I understand that as a beginner or intermediate trader, you might be thinking, well, those option premiums are nice, but how do I actually manage those positions? How do I go about closing these positions, taking profit, and making sure that these strategies work out for me from beginning to close? And that's exactly what I covered in my full free option trading for beginners course. Now you're going to see it on the screen. So check it out if you want to learn more about managing these strategies.